Hi friends, in this video I am going to talk about a genuine multi-bagger stock. This stock has genuine potential to grow further in upcoming years and can actually become a mid-cap stock according to my research that I have done. The name of the stock is Gujarat Themis Biosyn Ltd, also called GTBL. What you see on my screen is in the last 5 years, this stock has given close to 2000% return. And if you look at this stock prior to COVID period, it was trading at roughly 45-46 rupees, and now right now it is trading at roughly 800 levels. And also interestingly, if you see during the COVID at around March 16, the stock was not impacted that badly as some of the other pharmaceutical stocks. For example, if I show you Sun Pharmaceutical Industries Limited, when the COVID news broke, the stock was badly down as compared to GTBL. So GTBL seems to be a stock that is stable even if the big news like COVID happens. So there is something interesting about this stock that I'm going to share with you in this video. But the million-dollar question is that is this stock going to grow further or not, as it has already given 2000% return in the last 5 years. Well, few days back on my community, I created a dedicated post on this particular stock and I disclosed my particular investment strategy and approach on this particular stock. Also, I share in-depth analysis on stocks exclusively for my member community. You can consider joining my member community. But in this video, I am going to answer this million-dollar question by using 3 or 4 very important parameters, such as the fundamentals of the company, the business moat of the company, extremely important, valuation of this company, as well as the risks that we need to be aware while we are taking positions in this company. With that, let us go and talk about the fundamentals of this company first. Let us go ahead and have a look at the financials of this company. So first thing is that it is a small cap stock ranked at 1090 right now with a market cap of roughly 1165 crores. But if you look at the financial numbers of this company, let us quickly have a look at the revenue growth. So you will see that in the last 5 years, the revenues has grown at a rate of roughly 31.8% with the industry average of 8.53%. So it is growing at almost 4 times than the industry average, which is great. From a net income perspective, also, if you look at it, that it is growing at a yearly rate of close to 72%. That is a massive growth in terms of the income, where the industry is only growing at close to 11%. Again, from that perspective, it is growing at 7 times more than the industry from a net income perspective. From a EPS perspective as well, if you look at the data from the last few years, you will see that it is consistently growing at an extremely healthy rate, which is all good sign. So from revenues, from net income perspective, from EPS perspective, the company is looking extremely good, no problems whatsoever. But since this is a small cap stock, let us also have a look at the debt position to make sure that everything is all right. From a debt perspective, company has constantly reduced the debt. In fact, right now, company is almost debt free. From a ROE perspective, return on equity perspective, the company's last 3 years return on equity is close to 49%. Again, extremely important number here that the company is showing. Also from debtor days perspective, from a working capital requirements perspective, company has consistently made improvements in the last few years. So from that perspective, it is looking all good. Let us quickly also check the cash position of the company. So if you go and have a look at the cash flow of the company, we will see that last year it has shown positive cash flow, but please also understand in the next few quarters, company might show negative cash flow. The reason being, company is investing close to 200 crore rupees in the upcoming R&D lab, their API block, their fermentation block, things that really matters in the bigger scheme of things that I'm going to talk about in the business mode in more details. But the point simply here is that if you see negative cash flow in the coming few quarters, please understand that is because of the capital expenditure that the company is embarking upon. Also, let us have a look at the shareholding pattern of this company, and what we will see immediately is that from a promoter's perspective, the stake is 75%. It can't get better than this. Also, from a FII's perspective, there is no position, which is very surprising. I do not understand why such a good fundamentally strong stock, FIIs and DIIs have not taken any major positions. I'm not able to understand that, to be honest. But if you look at the remaining close to 25%, public seems to be holding the remaining 25% stock. So from a promoter's perspective, promoters seems to have very high conviction in the company. That is why they are holding close to 75% shareholding right now in this company. So from a fundamentals perspective, I am not able to see any major deficiencies or flaws in this company. It all looks really hunky-dory to me. But the billion-dollar question is, what is actually leading to such strong fundamentals of this company so that we can decide to invest or not in this company? Talking about investing, let me introduce M-Stock, which is a trading and investing platform that is currently offering lifetime zero brokerage across all products. Yes, across all products, including delivery, intraday, FNO, IPOs, mutual fund and currency at one-time fee of 999 rupees only. People pay hefty amounts on brokerage that can go up to 0.55% or up to 20 rupees per trade. But with M-Stocks, one-time fee of 999 rupees only, you can enjoy free brokerage for entire life. And if you're an expert trader, then you can enjoy margin trading facility at only 6.99%, which is lowest in the market. With just 1 year, M-Stock has managed to service more than 2.2 lakh users. You can build a custom index basket and you can also trade in FNO, mutual funds, IPO easily. Mirai Asset is the parent company of M-Stock that has been in the business for more than 25 plus years and is trusted globally across 15 plus countries. In case you want to start your journey with M-Stock, you will find the link in the description. Let me now present you the business mode of this company. So GTBL manufactures APIs. What are APIs? APIs are active pharmaceutical ingredients. For example, paracetamol is one of the APIs of Dolo. Now GTBL currently makes two key APIs. Number one is Rifa S and number two is Rifa O. So Rifa S is the intermediate for rifampicin that is used to cure TB and leprosy, while Rifa O is the intermediate for rifaximin, which is used to cure diarrhea and irritable bowel syndromes. Now, extremely important point is that these both ingredients are actually fermentation based, and there are very few companies in India that produces fermentation based pharmaceutical products. In fact, many companies have tried to enter into fermentation based manufacturing in the past and have failed miserably. So from that perspective, GTBL has a competitive advantage. Also, GTBL is constantly increasing their fermentation capacity. In fact, by end of 2024, they will have additional fermentation based capacity being introduced into their plant, which makes this company very attractive from a business mode perspective. This is their competitive advantage against all other pharmaceutical companies. Currently, GTBL is only selling in the domestic market, and there are two key customers of GTBL. Number one is Lupin, that is taking almost 40 to 45% of the sales, and number two is Optrix Laboratories, that is taking roughly 50 to 55% of their sales. With Optrix Laboratory, they have something called as take or pay agreement, while with Lupin, they have a long 5 years of contract. So from that perspective, their business is stable. But the key risk here is that they are only relying majorly on two clients, so there is always a concentration risk here. Now a natural question comes here that, Rahul, if this company is so strong from a fundamentals perspective, from a business mode perspective, how come their share prices have gone crazy within just last 2 to 3 years? What has happened here? Well, the key reason is that company's business model completely changed during F20, and they changed from a contract manufacturing business to manufacturing and sales model. So they are not doing only contract manufacturing now, they are manufacturing their products that gives them better margins. Therefore, their revenues, their net profitability, their earning per share has gone up in the last couple of years, and that gives them a competitive advantage. So far, we have talked about the fundamentals of this company in terms of financial numbers and the business mode of the company. Let me now present you the valuation, because we need to understand whether the stock is undervalued or overvalued right now. So what you see on my screen is three key parameters from a valuation perspective. So if you look at the enterprise value divided by EBITDA, you will see that it comes out to roughly 437 rupees right now per share. If you look at the enterprise value divided by sales, then it comes out to be roughly 267 rupees. And if you look at the price divided by sales, we come to close to 245 rupees per share. Right now, the share is trading at roughly 800 rupees. So from that perspective, it seems to be overvalued, but market seems to be giving this stock a lot of attention. Therefore, the share prices are on the higher side. If we also look at the PE ratio of this company, we will see that in the last 3 years, the median PE has been around 16.3. And right now, the stock is trading at roughly 20. From that perspective, it seems to be trading at a higher PE than the median PE in the last 3 years. If we also compare its peers in the industry, we will see that Gujarat Themis Biosyn's PE is right now 20 as compared to Sun Pharma, that is at 32, Cipla at 35, Dr. Reddy's at 21. From a PB perspective, it seems to be slightly on the higher side. Actually, it is at 7.81 compared to Sun Pharma, Cipla and Dr. Reddy, which is around 4.2. So the question comes, why is this stock enjoying premium? So let me give you my theory of why market is giving this stock a lot of attention from a pricing perspective. So the reason number one is that this company has not shut down their plants in the last 2 years. How do I know this? I listen to their investors calls. I will provide you the link in the description. If you have time, please go ahead and listen to this conversation. You will learn a lot about this company. So because they have not shut down their plant in the last 2 years, their idea is that they're building up inventories because management is very confident in opening the tenders that is coming up in the next few quarters, and the sales are likely to grow up, because of which people are very bullish about this company. Reason number two is that this company is going to come up with 10 to 12 new products in the market in the different areas such as cardiac, anti-infectives, etc. And what this does is that this massively reduces their reliance on two key products. It makes the company more diversified pharmaceutical company, and therefore the chances of this company becoming a mid-cap company increases further in the time to come by. And reason number three is that they are investing roughly 200 crore rupees right now to come up with a R&D lab, a brand new API block, as well as increased capacity in the fermentation. And this R&D lab and the API block will be functional by September, and they will start to do some trials for the upcoming products. And this fermentation capacity enhancement will be done and dusted by next calendar year. So that will give them some boost as well. Because of this investment, they are expecting a growth of roughly 25 to 30% in the next coming years. And their management right now forecasts that by the end of next financial year, they are likely to see all of these impacts in the top line as well as bottom line. Because of these fundamental reasons, market is valuing this company at a much higher rate than the current valuation that we see, because people are able to see the growth trajectory coming in this company and are bullish about this. Also, please be aware that in the next coming month or so, they are going to do stock split because of high price right now. So if you hold one stock, then it is going to split into 5 stocks so that the price of the stock can be adjusted naturally. My investment plan and strategy in this company I have shared on my member community. So you can consider joining my member community, because that is where I announce my personal investment plans. Please do not take this video as a stock recommendation. All I have done is I have simply shared facts and my analysis and my opinion about the company. In no way you should take this as a recommendation, because I am not a SEBI registered advisor. Please do some further research and accordingly you make your own decisions. But more importantly, if you want to learn how to find such high growth stocks, then you can watch this video, because in this video I walk through step-by-step process of finding high growth small cap companies that can give you a lot of profits in the coming years. Again, not a stock recommendation, just a process by which you can shortlist the stocks. You can also consider following me on Instagram, LinkedIn and Twitter. You will find my social handles in the description. Also, please be aware of the scams going on my name. I will never send you a personal message, email or invitation from any of my social media handles. So please be aware and do not give a single rupee to anybody, or do not click on the links that has been provided by people pretending to be me. Please be very safe and vigilant. I hope you enjoyed this video. If you did, press the like button and follow me for upcoming videos. I will see you in my next video. Until then, keep rocking.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.